So what all do you need to know? What are some of the changes? What is affecting you as a federal employee now that we're into the new year? First of all, you may have seen, and hopefully you know, that you received a pay raise this year. The average pay raise across the board is about 2%. So check your first pay stub going into this year, your first leave and earnings statement. Just double check, see what you received this year as far as a pay increase. Now, what does that affect? Obviously, that affects your pay, your take-home pay, but some of the deductions will change if you're going to compare between 2024 and 2025 after the pay raise, right? Some of the things are based on your total salary, like your TSP contribution. If you're putting in a percentage, not a fixed dollar amount, you'll see that percentage or the amount that is deducted increase a little bit. You'll see an increase in your FEGLI deduction, because FEGLI and the cost of FEGLI is based on your total base salary. If you have any of the optional coverages, option B will increase because it's a multiple of your salary. If you've hit in the course of time here, if you hit a birthday, an impactful birthday, you might see an increase that way. So just be aware of that. But the average pay raise, 2% across the board for federal employees. Now, if you're retired, there was a cost of living increase as well this year. It's different if you're CSRS or FERS. The CSRS employees or retirees saw a 2.5% cost of living increase, while FERS employees, some call it a diet cola, received a 2% increase. It's rare that the pay raise and the cost of living increase matched up exactly for, let's say, FERS employees, but it happened this year. So again, pay raise to active federal employees averaged about 2%. Yours might be slightly different depending on the agency you work for, where you live, the locality, all that stuff, but average about 2%. And the cost of living for CSRS retirees, 2.5%, FERS retirees, 2%. Social Security cost of living this year, 2.5% increase. So just so you see all of the adjustments to either your current pay or retiree pay or Social Security benefits that you're getting, those are the increases. TSP. Now, we did an episode on the TSP and how that's going to change from 2024 to 2025. But just to remind you that the increase in contribution went up $500 for the standard. I'd call it the standard contribution, right? The maximum that you can defer out of your paycheck went up $500 to $23,500 this year for folks that are contributing to TSP. Now, if you're 50 and older, the catch-up contribution is still $7,500. Awesome. But there's an increase now. They call it the super catch-up, if you will, or the enhanced catch-up. If you are 60 years old through the age of 63, so 60 to 63, your catch-up contribution went up from $7,500. Now you can contribute up to an $11,250 in addition to the maximum contribution of $23,500 from age 60 to 63. Pretty awesome there. After the age of 63, once you turn 64, it goes back down to the $7,500 as the catch-up contribution. But just to let you know, that super catch-up is new for 2025. Also, for postal employees, if you're part of USPS, your new Postal Service Health Benefits Program begins this year. So check that out. Within the different carriers out there offering the new postal program, that begins this year. So for postal employees, be on the lookout. Check out more information on the Postal Service Health Benefits Program. For those that are taking Medicare and Medicare Part B, the premiums for Part B increased this year. If you're contemplating taking Part B, increased this year to $185 per month. Now, this is before, any of those IRMA, those adjusted amounts for income, if you make too much money, but the typical Part B premium increased to $185. Now, IRMA, I did an episode and had a special guest on there talking also about IRMA. You can go back and learn more about the income restrictions or the income adjustments that can happen to your Part B premium if you make too much money. But those begin this year. Means if your modified adjusted gross income If you're a single filer, is in excess of $106,000, or if you're filing jointly, is $212,000. This is your modified adjusted gross income, and it's a 2-year look back for Part B premiums. So they use the income from 2 years prior. If it's above these limits, depending on how you file, you could owe more than the $185 per month for Part B. So just be aware of that. And that sometimes goes into the determination or the choice that a federal employee is going to make on whether or not they're going to participate in Part B. Because in some cases in retirement, we've talked about this before, it may or may not be beneficial for you. Now, paying for Part B, you get Part A, excuse me, of Medicare when you first turn 65. That's what you've been paying into your entire career or during your working career. But you have the choice when you turn 65 to take Part B or not. Go back and view some of our episodes where we talked about this, but understand how that cost and the opportunity or the chance that you might pay more due to those IRMA restrictions. You might pay more in your Part B premium. So it does go into the determination. A lot of federal employees I talk to, they're asking that. Do I need to take Part B while I'm working? Do I need to take Part B when I'm retired? What are the advantages or disadvantages of each? Without going into crazy detail here, reach out to us. I didn't mention it earlier, but our website, www.federalretirementshow.com. You can request some information, fill out the form. One of our reps, if it's not me personally, across the country, will reach out to you, go over your personal benefits and retirement situation, and get your questions answered.